I'd had those properties for 6 or 7 years. And every once in a while, you just kind of have to take a look at your portfolio. You have to reanalyze it and say, does it make sense? Am I making the kind of return I wanted to with these properties? And if not, does it make sense to just move that money to another investment and potentially make a higher rate of return?
This is the Saskatchewan Real Estate Podcast.
Hello and welcome back to the Saskatchewan Real Estate Podcast, your home for all things Saskatchewan, all things real estate. So today we're going to kind of pull the lens back and take a look at Canada, and really excited for the guest that we have here to do that with us. Canadian real estate developer and educator Darren Voros. With over 20 years of experience in real estate investing and a portfolio of over 250 doors, Darren has built a legacy through his passion of sharing knowledge, from being an investor and trainer to coaching aspiring real estate enthusiasts. He's traveled across North America, educating audiences on real estate investing, financial independence, and financial literacy. Welcome to the podcast, Darren.
Thanks for having me. Appreciate it. Great to be here.
On that list of things, Darren, I'm like, this is my type of guy. Real estate, financial independence. I love all of that. But before we get into kind of chatting about Canadian real estate and where we're sitting, Darren, just give us a backstory of your introduction into real estate and kind of your love affair with it, if you will.
Yeah, I mean, I started in 2002. I kind of backed into real estate. I wouldn't say that it was strategic by any means. I worked over in Japan for a year. I was working over at Universal Studios. My previous life to real estate investing was I was a musical theater performer. So I was a singer, dancer, actor. So I worked in Japan for a solid year, and I saved up some money. I came back to Canada. I was like, what am I going to do with this money? And, I heard real estate was a good investment. So I bought a house, and, that was a typical, I would say, first time experience. My hope was I was going to flip that property, make some money, move on to the next one. And I was going to use that to supplement my theater income. And then I couldn't sell it. I not because I didn't do a good job of flipping it, but it was just the market. There was a lot of, supply demand, right? And that's real estate basics 101. There was a lot of supply. And so, it sat on the market for a little while, and I thought, well, I got to do something. I rented it out. And rented it out for 4 years. The market in Alberta went a little crazy during that time, and I sold it. I almost doubled my money in 4 years. And I took that money then, and I went and bought where I was living, which was Ontario, and I bought almost 3 properties in about 6 months' time. And that's where I saw exponential growth in my real estate portfolio. I kind of went from 1 to 3 in a 4-year period, and I thought, hey, if I could do this every 4 years or so, this real estate thing might actually get me to where I want to be from a financial perspective. And so that was the beginning of it all. And then it kind of snowballed from there. And, it was a lot of trial and error. I didn't have any education. I don't come from a background of real estate investors. My family's not in the business. But yeah, you just kind of like learn as you go. And then, strategically, I got into it about 2014, 15. That's when I really started buying properties specifically for the purpose of using them as an income generating asset, and then building my net worth as well. So that was kind of my journey. And I've done a lot of different things since in that time.
Brilliant. You've connected with hundreds of people talking about real estate. And what are you seeing right now, Darren, from the Canadian real estate market? And as you're chatting to peers, what's the overall sense about buying real estate, specifically for investment purposes these days?
Well, I think most people get it backwards. I think that a lot of investors, I would call them fly-by-night investors. They get in when the market is going strong because they hear that people are making money in real estate. And so they jump in, they buy a property, and they may or may not know exactly what they're doing, and they may or may not have a little bit of success. I've seen it over the last decade in Ontario. People were just like, I'm an amazing real estate investor because I've been making all this money. Well, guess what? You didn't have to do anything. All you had to do was buy property and wait for another year or two, and it went up by 10, 15% per year. That's not really anybody who's very strategically being an investor, because what happens is you see what happened over the last little while, where the market starts to go down, interest rates start to go up. That's where the cream of the crop rise to the top, because now you're seeing the people that survived the last couple of years are the true real estate investors, I think, because they have a plan that works both in an up market and also in a down market. And so I've seen a lot of people, a lot of peers in the space just get demolished over the last 2 years. I've seen a lot of bankruptcies. I've seen a lot of people going, losing everything, single thing that they have that they've worked really hard for, which is not a fun place to be in, right? I mean, that's about as bad as it gets when it comes to real estate investing. But I think what I'm seeing right now in the marketplace is tremendous opportunity. But the problem is that most people won't jump on that opportunity because they feel like there's a bit of a cloud over real estate investing. So, like I said, it's kind of the opposite, right? People get in when it's going up, then it starts to go down, and they're like, "I'm not touching real estate right now," where it's the opposite. They should be buying right now because there's actually great deals out there. There's an opportunity for you to make conditional offers and put all the things in your offers that you want, that people have been looking for years and years and years, but they'll probably miss this opportunity. They'll wait for the market to start to come back up again, and that's when they'll jump back in, and they'll be back in the same scenario where they're buying on the upside versus buying on the downside.
Where are you seeing those specific opportunities? Or could you point to a few examples to say, oh yeah, like this is like a really great opportunity that I'm personally seeing right now?
Well, I mean, I'm not a Toronto guy, and I'm not born and raised in Toronto, but that's where I live now. I mean, Toronto real estate has been sort of the benchmark for the Canadian real estate market for like the last 20 years. Same with Vancouver, right? I mean, I think those are the two strongest markets from an appreciation perspective. And bidding wars were very common. Multiple offers, like 20, 30 offers on a single family property. And right now we're seeing, prices dropped significantly, significantly like 10, 15% probably, which is a lot for the Toronto real estate market. But, there's now opportunities. There's a pretty good supply demand balance there. Like I say, I've been making offers. I'm putting conditions on those offers. I'm getting long closings. I'm doing things that I just was never able to do. From a price perspective, yeah, I'm still buying properties like for 1.5, $1.6 million. So for the rest of the country, people would say that's crazy. But in Toronto, I know that that's actually a really good opportunity when I can take my time with a decision, have lots of different properties that I can look at and choose from. That's just one market that I'm seeing, right? And then I think you could go across the country and there's various different things happening in each real estate market. But in Toronto right now, and in Ontario in general, there's opportunity there.
I like what you're kind of talking about there, because within a real estate deal, there's probably a few different factors that make it a winning deal. Price is one of those things, but there's so many other little factors that go into making the right deal for you. So being in a market where for a long time you weren't able to have those extra conditions, it's probably nice that you don't have to go in guns a-blazing with conditions that you would really like to have. And now you can kind of go in with a little bit more, I'm in control a little bit more of this deal, and I can put things in place.
Yeah, it's taken a while for the sellers' expectations to catch the buyers, right? Because the buyers, for the last little while have been like, hey, the market's down. If you're selling right now, you absolutely have to sell. Like the people that are, in that position don't really have a lot of choice. But the seller's expectations always lag the buyers, right? So the seller's like, hey, I remember when the market was strong a year and a half ago, and I'm going to hold off offers and I'm going to expect a bidding war, and then they don't get any offers. Like, what's going on? I'm like, well, because you're stuck from like 18 months ago, 24 months ago. The real estate market's changed a lot. It changes really fast, right? And I think that's what people don't necessarily realize. And so, yeah, I think the seller's expectations are always lagging, but then it doesn't take long for that property to sit on the market. It's overpriced. It's, they're hoping for multiple offers. They don't get it. And their expectations get very quickly adjusted to what's happening in the actual marketplace.
Just under a year ago, you did a really great video where you kind of broke down selling your real estate portfolio in Alberta. And I'd love your perspective on the prairies, Darren, and kind of how they differ from a Toronto or a Vancouver, and kind of what you're seeing from Manitoba, Saskatchewan, Alberta.
Well, I think what was happening at the time in Alberta was you were just starting to see the market trending up, and it's been moving up and moving up swiftly, I would say, in the major markets like Edmonton and Calgary. I'm not super familiar with Saskatchewan and Manitoba, but I imagine it's a similar type situation. I think The difference with Edmonton and Calgary is that they've been very progressive on their need for development. And I don't know, I can't speak to Saskatchewan or Manitoba, but I know that Edmonton specifically has been pro development, and because of that, they've introduced a lot of different measures to allow developers to come in and build these multi-unit properties on land that used to be basically zoned for single family dwellings. So that's really driven the real estate market in Alberta significantly. I was in a position at that time where I was like, hey, this portfolio has basically not appreciated much over the last decade. I was finding that, I had 5 properties that equaled 10 doors in Red Deer. I was remotely managing it. I had a property manager in Red Deer. She was amazing. And the properties were just kind of ticking along, not really doing a whole lot. And I thought, well, why don't I just liquidate that portfolio, take that money. I can go and buy an asset in Toronto that I can put 10 doors under one roof, and get into the commercial side of things on the lending perspective. And so, yeah, I just made that decision. It was time, right? I'd had those properties for 6 or 7 years. And every once in a while, you just kind of have to take a look at your portfolio. You have to reanalyze it and say, does it make sense? Am I making the kind of return I wanted to with these properties? And if not, does it make sense to just move that money to another investment and potentially make a higher rate of return? I think that people get scared to sell things because we are told as real estate investors we should hold everything forever, which is a great strategy for sure. Like, real estate is a long-term game, but sometimes you actually have to look at your numbers. You have to look at your portfolio and say it actually makes sense to sell and move it to something else. So that's what I did. I sold those properties, and like I say, the market was kind of trending up, and it was actually pretty easy for me to liquidate the entire portfolio.
Is there a determination that you make as maybe a small investor where you say, if I own 5 properties and in 25 years I get those all paid off, that's a very nice little retirement income, and I don't have to go much farther than that? Where if you'd like to expand your horizons about the types of properties you're getting into, the portfolio that you want to build, do you think it has to have some sort of that leveling effect where you will kind of do the monopoly game of selling the smaller properties in order to get into those bigger ones?
I don't think so. I think that this is where we get a little bit off target as well, too, is that people often assume that there's a natural progression in real estate where it's like, well, I have to start with a single family dwelling, and then I get to graduate and get a duplex, and then I get to graduate from there and I get to go to triplex academy or whatever, like it kind of like it snowballs from there. I don't think that that's actually a thing. I think that what I see people doing a lot is they go after the shiny object syndrome. So it's like they see somebody making money in like rent to own, or they see somebody making money with flipping or wholesaling. And let's say they have 4 or 5 properties in a single family dwelling, or like in my case, I had 5 duplexes. Like I'd be better off to just focus on that strategy if that's really what I want to do and I really like that and it's working well for me. Like, why wouldn't I just keep trying to build that out? Or to your point, why not just, hey, optimize these properties, get them paid down as quickly as I potentially can, and then just ride that out. But I think what happens is we see somebody doing something else. We're like, oh, I should try that, or I should try that. And then they get into maybe bigger projects because they think that that's where they have to go next. They don't end up making a lot of money, or they end up learning really hard lessons, where they would have been better off suited to just stay with what they were doing and double down on that and scale and grow their portfolio from that perspective. I don't know if that answered your question, but that's for me, I think, where I see people making a lot of errors.
I think a lot of that comes down to what is your goal within real estate, and treating it that you have a long-term vision, and what does that vision look like. If the goal is to have a couple properties that you manage and it brings in X amount of dollars, amazing, you can stop there. If the thought is, I need to be making $50,000 with someone else managing that, well, you have to then expand your vision of what real estate is going to look like, and then kind of backtrack from there. Is that something that kind of ties into that, Darren, that start with the vision first and then you work backwards from there?
100%. And I think that's one thing that I was taught early once I started getting into my real estate education was, what are you doing this for? What's the end goal here? Like, are you trying to supplement your income or replace your income? Well, you're going to buy very different properties if you're doing that. If you love your job and you want to continue to do that, and you're just building net worth, well, that's a different kind of property you might be looking at there. But yeah, it always starts with, people talk about your why a lot. Like, why are you doing all of this? For me, I didn't have a huge why. I didn't have a big driver from that perspective. Like, I don't have kids, or I don't have a family that I'm like doing this for. I think like I had my parents, I watched them sort of struggle growing up with finances, but it's not a huge motivator for me. But I think it always has to start with the why are you doing this, or what's the ultimate goal, and then you kind of have to reverse engineer things and go from there. Versus like, hey, I want to get into real estate, just buying a property and then trying to figure out your plan after that.
Brilliant. Just wrapping us up on kind of the Canadian perspective and investing. If you were giving advice to the podcast, has like a very wide range of listeners. We have some people who have, 500 doors all the way to like, I'm just kind of growing here. What would your advice be for that person who has the large portfolio? And what's your advice for the person who is just starting out?
Well, I think right now, we're in a bit of a tumultuous time with real estate. So I think for the people that have been able to survive this, I would say kudos, right? I think that there's, for someone who has a 500 door portfolio that's able to been able to, like I say, weather this interest rate storm, if you will. I would say you've done well to set up what you've got set up. For people that are getting into the game right now, just understand that it's a bit of a tumultuous, area right now, and things are going to take a little bit more time to settle and to normalize, if you will. We're seeing sort of these parameters that haven't really presented themselves in a while. I heard that, across the country, pretty much rent has just fallen for the first time in 4 or 5 years, almost across the board. That doesn't really happen very often when you see inflation kind of doing what it's done. So I think that just take all of that into consideration, where we came out of the pandemic, we had this crazy interest rate hike, and we have the market sort of doing all these different weird things. But it's all going to be fine, and everybody's going to win in real estate in the end. I think like that's the thing that I just keep coming back to, is that real estate is such a solid investment that's done really well for Canadians over, hundreds of years, and it will continue to do that. It's just that right now we're in this bit of a pocket where it's a bit of an interesting environment.
Okay, very good. Staying on the advice front, if you could go back to a young Darren and you could give him some advice, what would you tell him?
Well, I would say go bigger sooner. I think I think that I played in the smaller space for longer than I probably should have. And I think that I have a sort of a limiting belief around success in some ways. Like, that's one thing that I've learned over the years. And so the only thing really standing in my way is essentially me and my ability to execute on what it is that I want to do. So I would say to my younger self, like, don't be afraid to take a few more calculated risks and go a little bit bigger sooner, because those will definitely pay off if you know what you're doing and you're backed by education and also mentorship. And I think those are two big things that I would have also gotten into a little bit sooner, is finding somebody in the space that really that I want to emulate, and then following them and asking them for guidance.
Beautiful. Walk us through the last one, Darren. Where can people connect with you? Is there anything you'd like to promote, or just give you this opportunity to chat about anything you'd like to stand us off here?
My website, darrenvoros.com, is the easiest way to sort of get in touch with me. I have a lot of different things that I do. I have a development course and program that I run. So people that are interested in learning how to be developers, they can check that out. I run a mastermind. That's where I am right now. This weekend, we're in Kelowna running a 3-day event for Synergy Mastermind. So if you're wanting to be a part of an elite group of real estate investors that are really growing and scaling their real estate investing businesses, you should check out Synergy Mastermind. And then for those people that are interested in the passive front, we have all kinds of development projects that we raise money for, and people can use their registered funds and invest with us on solid assets in, both in the Toronto area, and also we have international investments in places like Costa Rica. So I appreciate you giving me the time to give a few plugs for things that I'm doing. But I think that's one of my biggest things that I started in the space was with a thought leadership platform, and that's my YouTube channel. And so if you haven't checked out my YouTube channel, that's also something you can do, and it's free and it doesn't cost you anything, and there's tons of great education there. And, this is a great platform that you've got, and kudos to you for doing this kind of thing to help people out, because it really is something that is undervalued by the real estate investing community, is people that have thought leadership platforms and continue to do this for little to no reward other than just getting your name out there and your word out there. So I think that's something, a tip of the cap to you as well.
I would disagree slightly. I think there's like piles of reward for doing the podcast. It's incredibly beneficial for me on that side, but I do love the idea of leading with value, or kind of doing that thought leader side. So that's how I've been following you for quite a while in your YouTube channel, and there are very good videos in there, lots of insight. And so I love people who kind of will offer for free that value and share it out there. So I really appreciate you again sharing that value here, and thanks for making time to come on the podcast.
Thanks for having me on.
Thanks for checking out this episode of the Saskatchewan Real Estate Podcast. Before you go, a quick reminder that I'm a fully licensed mortgage broker in Saskatchewan. If you're a first-time home buyer, have a renewal or refinance coming up, or need assistance with advanced mortgage strategies, I am here to help. If you're looking for assistance, simply head to ronqmortgage.ca or click on the description of this podcast episode for my booking calendar. I would love to help you on your next mortgage transaction. Until next week, I'm Ron Caroni, your Saskatchewan mortgage professional. Bye for now.